Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, as usual, remember, nothing discussed today is financial advice. I'm not a financial advisor, and it's for educational purposes only. Now that's out of the way, I'm going to keep this one short and sweet again because there's not a right lot to update you guys on. So if you want to know what levels I'm going to be trading, I'm going to update you today. Right, so Bitcoin, downward trend. This is on the daily. The weekly still doesn't look horrendous. However, it is important that the weekly manages to maintain above these last lows here. And any closure down here, then, you know, we are starting to break some high time frame structure. But for the time being, we're still in the top end of the range. Now, obviously, last week we were looking at this level. And if we zoom into the 1 hour chart, and we'll zoom out a little bit here so we'll get a bit more data. This is what we were looking at on last week's video. Let's get that out of the way. Price last week when we were recording, we were up here, and the options were either take a stab at these highs again, up into this local value area high, or failing that, we lose this current support and we'll come back down, and likely we're going to come back down to see this point of control again. But as we did say last week, this point of control has been tapped several times. So as we said, if a level gets tapped several times, then it gets weaker and weaker. And in the end, what happened? Well, quite simply, we just broke through this level, we came back down, swing failure pattern, and then we reclaimed the value area low. So for me, this was a long trigger, exactly as we laid out in last week's video. And we were saying that if this does happen, then we've got to be aware that this point of control is just above us as well. So we are longing straight into resistance, and we're longing against the trend, the local trend. So quick take profit one, stops to entry, and if we end up getting stopped out when it comes back down lower, then absolutely fine. And again, this is exactly what I said in last week's video, right? So in the end, we got a nice little bounce. Then we got this long sideways consolidation where it bored everyone to tears. Now there were some nice little trades to be taken in this. Now again, I'm going to reference the old influencers in this, and this again is a bit more educational content for you guys. Within this sideways consolidation here that happened effectively from Friday after the drop down, we then ranged for what, best part of 4 days, and within this range we saw God knows how many influencers doing this triangle. And then once that the one didn't play out, they'd go, oh, triangle. And then they go, oh, triangle. And there was triangle after triangle after triangle, and there's fake outs left, right, and centre. And, you know, their followers are just getting wrecked. And rather than trying to cram in patterns into this, just very simple, just get the fixed range volume profile tool from the start of this consolidation and just pull it along as price evolves. And what you're going to see is, look at this. It's just a sideways range. It's not a triangle. It's not a fancy pattern. It's not head and shoulders. It's not a double bottom. It's just a sideways range. And we can see here, we had this. We came up. We hit the high. We came down. We hit the low. We hit the high. We hit the low. Deviate the high. Back in. Reacted around the point of control. Again, it's a sideways range. That's all it is. You don't have to overcomplicate it. You know, if you want to make it even easier without using a volume profile, just throw on a parallel channel. Lows. Highs. That one didn't work. Let's put it on the right one. There we go. Lows and highs. You're in a sideways range. You can either treat it like that, or you can do it as a smaller time frame range. You know, ignore this big wick here. Either way is absolutely fine. You're just in a sideways range. You know, you can make it really clear and really easy. In that case, you know, very simple trades to be taken within this. Referencing where the EQ is, where the value is, and then the outer of the range. So stop trying to force fit patterns everywhere. If you're going to use patterns, then learn something like Elliott wave theory. Because if you learn Elliott wave theory, then you understand how these patterns are derived and how to trade these patterns really well. Okay? Right. Before we get into what I'm looking at next, shout from today's video sponsor, which is PrimeXBT. PrimeXBT are a platform where we can not only trade crypto, but we can also trade FX, commodities, and stock indices. Now, once again, like I've said before, this is the platform that I personally use to trade stock indices, commodities, and FX. And again, the beauty of these guys is you can use crypto as collateral. So if you deposit USDT or Bitcoin, you can use that to trade against the various pairs on there. If you do use our link down in the description, following the codes, then you can get up to a $7,000 bonus, deposit bonus, and use the second code, and you can also get 25% off trading fees as well. So yeah, if you want to trade on Prime XBT and support the channel, then go check them out in the description. Right, back to it. Let's see what we're looking at next. So all we have to do is zoom out, and let's throw on the overall range. Now, if we zoom right out, we can see this is the overall range. Now, we've been tracking this ever since it began, ever since the June lows, and this high was put in back in August. And we've been tracking this ever since. And it's just a case of simply longing the lows and shorting the highs. And again, this is macro. So, you know, each one of these is a potential swing position. So, for example, this was a swing position, and we traded this nicely down. Traded it down into the range lows, and then we did get this deviation. Okay? Then you've taken profits all the way down. You know, natural take profits would be the EQ, the overall range lows, and then if you do want to leave a little bit to run, you leave a little bit run, and that's a lovely swing trade. Now, just like the opposite way around, where we longed from down here, and we've taken this up, we managed to successfully break back into the range, got up to the EQ, good take profit region, and then flipped it and came up to the macro range highs. So once again, this wasn't a place to long. You know, you've seen all this move. Why did you decide to long up here? It's just bad practice. You know, it's just a simple range. We're in a sideways range. Now, speaking of said sideways range, we are now here back at the EQ. Now, this was, again, part of the plan that we laid out last week. Now, this plan has not fully come into play yet because we've got two things going on right here. So first and foremost, if we zoom into the weekly, and I'm just going to throw it on a level here. Now, this is based on February's open, this level right here. So if we then zoom back out, and let's come out to the 1 hour chart. So there's two things that's going on right now that I'm watching. Either A, if we can reclaim back above this weekly SR level, then we're potentially still trading within this environment. Okay? But we need to see some strength here. We need to get back above that daily. Okay? If we can't get back above that daily, then like I said last week, I'd be looking to come back down into this zone here. So effectively, let's change this to green. It's my OCD. And let's get the pen tool again. So if we do end up rolling over here, then first and foremost, I'll be looking to either A, grab this liquidity from here into this green box and then back up. If that doesn't hold within this green box, effectively, this level here is the line in the sand. If you lose this range here, then unfortunately, it's very thin on the way up. We see that. We just throw on the volume profile and we can see here, look at this. So all the volume's up here right now. And then if we do lose this level here, then it becomes very thin. Okay. So there's one thing that you can take note of is we do have this psychological 20k level down here, which also lines up with the CME gap. But again, you know, just to blindly long something like that, if price does get down here, then you're a bit of a fool. You'd want to see at least a market structure change down here before you start trying to long down here, if it does get there. If not, you just let it roll over. Come back in to your overall range lows. Now, there is a macro point of control throughout this as well, but again, it's very thin is this. Very thin move. So if this does happen, then we're coming back down. Okay? However, if this does hold, then you've got your long trigger. And once again, you're just playing this top half of the range between the LOEQ and the macro highs. Okay? That's all we're doing. And we throw on a volume profile and we can see where the bulk of the volume is. So we now know that if price does get up here, we can see that there's a high volume node right here, the point of control, the local point of control. So that is to be considered resistance, okay? So if you guys want to understand how to trade like I do and understand where to use volume profiles and how to use them and how to spot where liquidity is, then first and foremost, come over and check out our website, spitfiretraders.com. Links down in the description. On here, you can get access to our free Discord, where you'll learn loads of things. Huge community. And then if you want to take your trading to the next level, then check out our TA course, okay? There's hundreds of hours now of educational content on there that you can watch. You know, within the video library, there's everything from absolute beginners through to more advanced trader. Okay. And if you do come over and you spend a whopping £60 to get access to all this, then you'll be able to check out this Tuesday's live stream, which is our latest live stream that we've just done, which is strategy building and backtesting. Because one thing that's to know, out of everything that I teach a lot of different tools and a lot of different forms of technical analysis because I'm a confluence trader. So what that means is I overlap many forms of technical analysis to try find the highest probability setups. Okay? But within this, you can easily also build your own strategies. I mean, I've got lots of strategies in here. I mean, for example, like in the altcoin, there's various strategies within the altcoin modules and the strategies throughout the other modules too. However, if you want to build your own, then come check this out. So it's how to build a strategy and how to successfully backtest it. And, you know, from the feedback from the course, from the stream itself, it's quite good because people are starting to realise that as long as you're using risk management, you can have a strategy that's only got a 40% win rate, but it could give you insane returns because it's all about risk management, and that's something that this video highlights. So yeah, if you want to learn how to create your own strategy and how to backtest it efficiently, then come check it out. All right. So back to it. Let's see what we're going. Let's clear this up again now. Let's get rid of this. Let's get rid of some of these brush marks. And let's do a quick recap. So from here, we either reclaim this weekly level here, and we're moving up, again, making reference to that point of control that's up here. If we fail to reclaim that, then I'm going to be looking for at least a liquidity sweep down here. Okay? And ideally, you want this consolidation to hold if you're bullish. So if this consolidation fails to hold, then we're looking for a further drop, okay? I am still swing short from here, and I am still swing short from my other swing shorts from, well, nearly a year ago now, or over a year ago, okay? But I still do hold on to my swing long. So yes, I am hedged. So I am prepared whether the market goes in any direction, I'll still profit, okay? So that's how you need to trade. So obviously, if you want to trade like us, come check out spitfiretraders.com. And until next time, guys, I will see you later.